Okay, so here we go. We are wrapping up the first month of 2024. And what the heck is going on with interest rates? What's going on with the housing market? And what's the Fed going to do? So let me catch you up on what's going on and give you some information to help you to guide your journey as you're looking to purchase a home, refinance a home, or if you're an industry professional that's looking to guide people through this process as well. So first and foremost, I got some feedback that I was using the red brick background too much and that I need to do more outdoorsy background. So how's this for outdoors, right? Like I'm totally outdoors right now. Can't you tell? Yeah. Anyway, what's going on next week? It's a really, really big week. So today was the last of the inflation reports for the month of January, which really, these reports are December's reports talking about how inflation was in December. And yesterday was the gross domestic product or GDP report that came out. So those are two critical reports that are going to impact what the Fed does next week. But there's an even more critical report next week on Friday. So what does all this mean? Really, really simple. What's happening is the GDP yesterday came in super strong, stronger than expected. What is GDP? It's a measure of how the economy is doing. And a recession essentially is 2 consecutive quarters of the GDP dropping, or the United States being less productive, producing less goods and services than they did the month before. Well, the economy was humming. Yesterday said the economy is doing great. We're not worried about a recession. At least that's what the economy is saying right now. That doesn't necessarily mean that's what's going to happen, but let me explain what happened today. Today, the PCE, or I don't know, producer cost, I don't know, whatever. Anyway, the PCE report came out and it measures, it's a different measure of inflation. And it's one of the Fed's favorite measures of inflation. And it said that, hey, inflation is up right now at, gosh, what did it say this morning? 1.9% on average over the last 6 months. So it's 2.9% over the last 12. But the Fed made it clear at their last meeting, hey, we get that as inflation goes down, inflation numbers are based on the last 12 months added together. And so the further we go, every month we get rid of the month before and we add the newest month. While we're with that game of getting rid of the oldest month, they're basically saying, hey, we respect that we've probably solved the inflation problem if the most recent 6 months is trending at our target. We're literally at the Fed's target. So therefore, the Fed keeping interest rates where they're at right now, it's really restrictive. It actually should create more deflation, decreased inflation. And you might think, well, John, that's a good thing. Like, I don't want inflation. But you do because you want that pay raise next year, right? You want that pay raise that your boss promised you in February. That's normal inflation. There should be a little bit of increase in wages, increase in cost all the time. So 2% inflation is the Fed's goal. We're literally there. But the Fed's not going to drop interest rates next week, in my opinion, because the Fed is still worried about two things. They're worried about how healthy, how much energy is the economy running with. And that has to do with the GDP report yesterday. And that report says, maybe we shouldn't lower rates, because if we do, the economy is going to keep going super strong and we're going to have to turn around and raise rates again, because it's going to, good economy equals inflation. So we've got a lot of mixed signals. We've got good economy yesterday. We've got inflation in check today. And so now the Fed next Wednesday is going to say, you know what? I'm not sure. This is my opinion. I'm not sure if we should lower interest rates yet or not. And everybody has predicted the first rate drop to be in March. So the Fed meets every 6 weeks. So they're meeting basically the last week, literally January 31st is the day of their press conference. 6 weeks later, which is going to be the second week in March, the Fed will meet again. I think that's the time that they drop interest rates, but they're going to pay a lot of attention to the employment numbers, because the employment numbers are telling a bigger story. The employment numbers say how many people are working and how many jobs are being created. I talked about this a couple of weeks ago, so I'm not going to go too deep into it, but the employment numbers are going to be critical. That report comes out the first Friday of every month, which means we're going to get 2 employment reports between the Fed's meeting next Wednesday and their meeting in March. If those employment reports show a lot of job growth and they show a lot of wage pressure for wages to go up, the Fed's not going to drop interest rates. And as a matter of fact, in the meantime, we're likely to see mortgage rates continue to move up. I say continue to because the month of January saw rates move up. Even though November, December, we saw rates come down, January, they bounced back up some. And it's for these same dynamics that we're talking about. Please do not misunderstand. The Fed does not control mortgage rates. Mortgage rates fell in November and December because the Fed expected that, the market expected that the Fed is going to lower rates between 3 and 6 times this year. See, what you fail to recognize is the Fed watches, the market, the traders on the market, they watch the news just like you and I. And so those traders are knowing already what the Fed is planning, and they're making trades based on that expectation. So when the Fed drops rates in March, like I expect, that does not mean mortgage rates are going to fall. Mortgage rates are going to rise or fall based upon the economic data that we think the Fed is going to use to make their decision. So rates will move in the same direction as the Fed, but the Fed doesn't lower rates. So do not wait and say, oh my gosh, I want to buy in March because that's when rates are going to fall. The Fed lowers rates sometimes and mortgage rates go up because maybe the Fed says, hey, we're lowering rates, but we're not going to lower them as quickly or as often as you thought. And so now the market has to rethink it and say, well, they lowered rates, but we figured they were going to lower them a lot more. That's what causes a lot of volatility. Now, one other thing I want to talk about is demand. Demand for mortgages, specifically buyers looking to buy houses, has skyrocketed in January. I've seen more people reaching out over the last month than I have in the last 3 or 4 months. Now, the last week has been an anomaly because of the new Dream for All program being announced. And that's creating a lot of interest. But here's the deal. That just proves my point. This Dream for All program, if you don't know about it, let me know. I'll give you all the details that you want. But the fact of the matter is the Dream for All program is not actually starting to take reservations until April. And you're not going to find out if you won until May. And only about 10% of the people that request a reservation are actually going to get one. But what it's proving is there is a huge amount of demand for houses. And people want to use this Dream for All program because they want to get a lower monthly payment. As interest rates come down, they're going to be willing to buy without the Dream for All program. So if you're in the market to buy a home, look at the supply and demand. Look at the competition. Your competition is showing their hands. Everybody is reaching out, looking to get qualified for a mortgage right now. If you're shopping, shop quickly, because the sooner you get in contract on a home, the more likely you are to not be competing with as many people. It is critical to understand that. It is critical to recognize that the signs are on the wall and that it's really, really clear. This year, we're not going to see, homes skyrocket like they did in 2020, in my opinion, but you're going to see a lot more demand. You're not going to see many houses on the market. You're going to see a lot of people chasing very few houses. So don't be someone that waits hoping that, hey, I can catch a lower interest rate. You're going to pay higher prices for the house, in my opinion. Thanks for listening, gang. Hope you have a wonderful week, and we'll talk to you all soon. Call me if you need anything, and we'll talk to you soon.